So guys, in this video we are coming to talk about market structure. Okay, for you to understand market structure, I think you all know about smart money concept, a basic smart money concept, and you need to understand that smart money concept is divided into three categories. The first one is market structure, second one is liquidity, and the third one is what we call POI, or you can just call it point of interest. Point of interest is just the place we take the trade. Okay, so for us to get a definition very easy, market structure is a set of behavior of how the market is working or how the market is moving. I don't want to get too much definition for you to know shit. Okay, so just let's go to the point. This is what we call market structure, a set of behaviors of how the market behaves. It's like where the market is moving, where the market is going, where the market is coming. It's just how the market behave. Okay, so in the market structure we have what we call a breakover structure. A breakover structure, pay attention to the definition because it's very important. A breakover structure is when market keep breaking key levels but keeping the same directions. For example, this is a bullish market structure: higher high, higher low, higher high, higher low, higher high, higher low. I said that the breakover structure, the breakover structure is when the market keeps breaking certain key levels but at the same time keeping the same direction. For example, this is a key level that has been breaking here. This is the second key level that has been broken here. This one is the third key level that has been broken here. It can be as so many key levels can be, but the market is still keeping the same direction that it is bullish. This is the what we call a breakover structure. I'm giving you the second example by talking about a bearish one. This is higher low. As you can see, this is a bearish market structure, but at the same time you can see that the market structure is what the breakover structure. This is breakover structure. A breakover structure is when market keeps breaking key levels as this but keeping the same direction of the same bias. In many words, you can see the key levels still being breaking around here, but the market keep the same direction, that is bearish. This is what we call a breakover structure. So if we go to the chart, this is gold. I want you to get the point very easy. Okay, for example, this place, pay attention. This is a breakover structure 1. This is a breakover structure 2. This is a breakover structure 3. This is a breakover structure 4. And those breakover structure can be maybe like 1,000, or we don't know, as the market gives you, but the market still keeping the same direction or the same bias that it is bullish in this place. You can see, right? This is what we call a breakover structure. For example, when we're talking about a bearish breakover structure, we can see that key level has been broken here, breakover structure, key level has been breaking here, breakover structure, key level has been broken here, breakover structure in a bearish bias in this place. Okay, this is a bearish market and the other one, it was a bullish market. I know that some of you just understand this market as a bullish because it is just like that, but you also know to understand what we call a internal market, right? Because it won't be easy, it won't be always like that, right? So you need to understand the point that I'm taking about. So I'm giving you more examples. For example, this place is a bullish market and we are coming to find what we call breakover structure in a bullish trend. This is a breakover structure breaking key levels but keeping the same direction. Okay, this one is another breakover structure in a bullish market but keeping the same direction. Do you understand now what is a breakover structure? Just as simple like that. Market breaking certain key levels but still keeping the same direction. Let's look for a bearish market right now for us to see. For example, this is a bearish market. and we got here a break of a structure, one, a break of a structure, two, a break of a structure, three, a break of a structure, four, but the market still keeping what? The same bearish direction. This is what we call a break of a structure. All right, I want you to understand this very well. You can practice on your laptop or on your trading view for you to get a better view. Okay, I'm going to show you what we call a double break of structure. There is what we call single break of a structure. That is the one that I just show you. Okay, this is what we call a break of structure. But there is other one that we call double break of structure. Double break of structure. There are two categories of break of a structure. I want you to understand, guys, this strategy is profitable as shit. It works 100%. But you just need to keep and pay attention of that. I'm giving you the guarantee that this works 100% because it's the one that I'm using and it's the one that I'm testing right now. For example, I can show you again my community some trades that we took. For example, this gold bearish, okay, this trade on gold, we took it in my community. This I think 1 to 9 or 1 to 10, I don't even remember. This is the second one that we hit SL on BTC, but this was almost 1 to 3 on BTC. Do you understand what I'm saying? So it works just like that. So you guys need to pay attention in what I'm coming to teach you right now. So pay attention. What is the double break of a structure? A double break of a structure is when market breaks more than one consecutive zones. What's the meaning of that? I'm coming to give you an example. For example, this is a break of a structure to the upside. I will repeat, a double break of a structure is when market break more than one consecutive zone. What's the meaning of that? It means that it needs to break at least two. It means more than one. It needs to be like 2, 3, 4, or 5, as many possible, but it shouldn't be only one zone. Do you understand what I'm saying? Let's say, for example, there was a bearish bias. Okay. All right. What is a double break of a structure? This is how you mark it. You know that this is a break of a structure. Okay. And at the same time, we have this one from here. So you can see that these are two zones that has been broken at the same time and consecutively. It means that it needs to break two of them at the same time. Like you see, the first one is around here. Let me show you. This break of a structure down here is the first one. Okay, the second break of a structure is coming from this place. Pay attention, this is very important. This is the second break of a structure. This is the first one. As we continue, we can see that this is a break of a structure coming from this place. Okay, let me mark a wall for you to know. Okay, and this one is another one. You can see that there are two zones that has been broken, but this one here is just a single zone. Why? Because this one didn't broken as like 2 seconds. Like, I don't know how can I explain this. Like, it didn't broken two of them at the same times. Do you understand what I'm saying? Pay attention, as this break of a structure and this break of a structure has broken these two consecutive levels. The first levels is this one. This is the first level. Let me show you. First level, second level. Okay, but when we come down here, we can see that there is only one level that has been broken, but it should be two consecutive levels. Pay attention, it shouldn't be only one level, it should be two of them. Means that the one that is in your left needs to be above that the one that is in your right. Let's go to the chart for you to understand the point I'm talking about. All right, For example, this place, okay, pay attention. This is a breakover structure or single breakover structure, but when we have this guy above him breaking it at the same time, it's what we call a double breakover structure. This is one of the examples. Okay, where more can I get one? For example, we get this one here, and at the same time we get this one here. Do you understand? So we break two consecutive levels, and at the same time we have this one above here, and at the time we have this guy above here. So this is what we call a double breakover structure. Let's go again to the chart because I want you to understand those points. If you can understand those points, you can be profitable in this strategy because all of them are very important. Okay, for example, we have this breakover structure 1, and at the same time we have this breakover structure 2. Do you see, right? This is what we call two break of structure. It should break two consecutive levels. Why am I calling this place level? Because this place, it works as a support. Do you understand? Normally the market can just come like that and continue the bearish movement, but no, the market break that place or break that place, and at the same time it break this structure around here. So that's why I'm saying breaking more than one consecutive levels mean that it needs to break at least two consecutive levels. This is what we call a double breakover structure, and we have 1, 2. This is a breakover structure, and this is a breakover structure. So do you understand? This is double breakover structure. Why? Because it break this level and also broke this level here. You see the double breakover structure, how it works, right? So it should be something like, for example, the market was bearish like this, and the market started to reverse to the upside. Okay, so from there you can choose those key levels. For example, this key level, wait, it needs to be above. Okay, let's put it above here. All right, this is a breakover structure, and this is also a breakover structure. So you see what we call a double breakover structure, right? We have another one here. This is a breakover structure, and this one is also another breakover structure. So this is when we are talking about a bullish market. All right, so let me give you a bearish market double break of a structure. How does it work? Just simple as that. Double break of a structure in a bearish market work like this. Let me give you. Okay, I'll give you the example out of the chart. Okay, for example, this was a bullish market. Okay, let's say this was a bullish market, an accident of wherever it is, the market start to go to the downside. Okay, like this. How do we take a double break of structure from this market? A double break of a structure is when the market break two consecutive levels. Definition is the same, it doesn't change. This is a break of a structure, and at the same time we have a break of a structure inside here. So this is what we call a double break of a structure. Why? Because this place can work as support, and the market could have just come like this and continue to the bullish bias, but the market didn't do that. So it means that it's a support that has been broken. I can call it support, or you can call it a support, you can call it a breaker block, you can call it order block, you can call it whatever you want. I call it key levels, but it doesn't matter. What is matter here is that everyone is here because we need the money, right? So if I see something that can give us money together, so I need to share it. Isn't it like that? Or because some people think that when they come into trading, it is only about, I think some people think that trading, or according to what I've seen, trading is the only place where teaching is considered as a fraud. But when they are going to the university 4 years, they prefer to pay for something that they don't even know if they will make them profitable. So trading is the same shit, bro. You are here to learn, okay? So let's go to the point. This is a break of a structure, and at the same time, we have a double break of a structure. Why? Because it broke two key levels. First key level and second key level. Okay, let's go again. This is a break of a structure. This one is also a break of a structure. So it broke two consecutive key levels. This key level and also this key level. So let's go to the chart and check. Okay, for example, in this small bearish market from this place to here, we have what? We have a break of a structure, let's say 1, and a break of a structure 2. This is a double break of a structure. Another one can be this one, and also this one. Two consecutive key levels that are first one and second one. Okay, the other break of a structure can be this break of a structure, and at the same time, okay, this guy didn't come here. If the price could have come to this place and break this key level, that would have been another break, double break of a structure. Okay, let's look for more double break of a structure from a bearish market. As simple as that. For example, in this place we have this break of a structure, and at the same time we got this break of a structure. So we got our what? Our double break of a structure. Okay, just simple as that. Just simple as that, guys. You don't have the strategy consists about a break of a structure, inducement, and taking a point of interest. But right now you need to get the what we call get the definitions, right, for you to understand what I'm saying, because I know that the world, this is 1 to 7, I can say, yes, 1 to 7. So pay attention about this strategy, because this shit works 100% if you pay attention. If you don't pay, that's not my problem. So let's continue. Okay, for example, in this place we have, in a bearish market, this break of a structure. From here we have another break of a structure from here. So this is a double break of a structure. We have another one here, break of a structure, and another one here, double break of a structure. So this is the class of today. I'm gonna bring the next class, what we call a market structure shift. But you need to practice this in your computer, and you on your phone, on your laptop, wherever it can be. But if you're a trader, I think you have a trading view, so you can start to practice this for you to understand the point, because you don't have to be the left one when it comes to teaching, because all of your friends will leave you, right? For example, in this place we have a break of a structure here, okay, and also we have another break of a structure just here. This one is a break of a structure. This is 45-minute time frame. I think you can see it from here, right? Follow my, you can see it from here. This is 45 minutes. So if you go to 15 minutes, you see this place as a normal break of a structure. But you need to understand that this is also a double break of a structure. How do we take this trade? This trade, we take the inducement. But this one, I know that you don't know this part, but we go to this part and you take the breaker block. This is your trade. So you need to be patient and learn what you know for now. Okay, Just simple as that. So you guys need to learn. The trades need to go above. This is 1 to 10, guys. So what I want you to do is to understand the concepts that I'm teaching you. The first one was to understand the market structure, and this one is about breakover structure and double breakover structure. You guys need to learn. For example, this is another one. This is a breakover structure in this place, and this one is also another breakover structure. Why? Because it's like a key level. First key level, second key level. Do you understand? So it breaks two consecutive zones at the same time. This is what we call a double breakover structures. Okay, so pay attention and go and learn about this. See you in the next class.